Hello guys, welcome back to another episode Trading with Shaka. I have a surprise for you. In today's video, I will show you the simple way to trade ICT power of trade. I promise you guys, after watching this video, once you go and back this, you got to come back and thank me forever. Without wasting much time, let's go to the chart. I will explain the entire strategy. So before we trade the ICT power of trade, you need to have this in back of your mind. We must have the bias in our hands. Without knowing the bias, you got to have fake outs all the time, and that's what we treat in this very episode today. I will teach you the entire process on how to identify your bias, the entry model that I use, the proper entry model you have to use once you have these types of bias. So that's what so without taking much time, let's go into the drawing board. After the explanation, then I will take you to the live example to see how powerful this very simplification of ICT power of trade has become in our trading days. See you there. So guys, let's begin. Remember, we can't talk about bias without the market structure. You have been following this channel, you must now be conversant with the way I trade. So let's assume we are starting with uptrend. Today you have to touch everything, both range and downtrend. Let's assume price was in uptrend. Price moved from internal range liquidity to external, from external to internal, and now we have a break of structure. So now this is our break of structure. We have moved from this internal to external. Now, as price is in this very external range liquidity, we are anticipating that price is likely to come back into this extreme order block, which we call demand zone, or if there is a fair value gap here, these are the zone we are expecting the price to come in. Because we are not trading SMC, we are trading power of trade. We can't just fold our hands and watch the price come back into this very zone without taking any action. So how do we get involved? This when bias comes into play. Are people making sense now? So there's a way to identify bias, but I will teach you this simple way. We are just using two candles to determine what will happen in the next three candles. So this is daily time frame. The structure must be identified in daily time frame, and the bias will be also identified in daily time frame. So because we have break of a structure and everybody is now waiting for price to come, both SMC traders getting involved with bias, because you're in uptrend here, we are likely to see price in this very form, that this is the daily candle. Let's assume this is the daily candle. We have this candle, it closes bullish. The next day, price opens here and moves up. At the end of everything, it price close back inside this range, leaving us with a wick. For this reason, we are now anticipating that price is likely to drop back inside this range, because we have the notification from daily time frame that this is exhaustion of this movement. So now our bias is bearish. The next day, the third day, is bearish movement, right? But we have to come into entry model. So let me teach everything once. This movement created the external range liquidity movement. So it's likely we have a price in this nature. We have bearish candle. This is a bearish candle, and that the next day price failed to continue low. Maybe price comes down, and at the end of everything, it closes back inside this range, leaving us with a wick. This is a wick. So the third day, we are now anticipating that price is likely to do what? Price is likely to continue its movement into this external range liquidity. Now moving to entry model. We have two types of entry model, but because today we are teaching about power of trade, we are going to emphasize more on the entry model of power of trade. So this is what we'll be looking for, because this range, this week here in the lower time frame, is like a liquidity zone. Price is likely to target this zone because it's still an uptrend. You have to do some magic movement before it starts pulling down. So we have to mark our liquidity zone in 15 minutes time frame. Maybe we have two highs or low there. We have to mark it out. As the price opens here, this is the closure of the candle. As price opens here, it's likely, but the first section is Asian section. We are likely to see this type of range. We are only paying attention when price take out liquidity here, because the manipulation phase will come during London session. So here becomes Asian range. Pay very good attention, please. The manipulation here, this is Asian range, And as London volume comes in, it's likely to move up, take out liquidity, maybe here or here. Then we look for market structure shift and get involved, target this very low, or you can still target any meaningful zone. For you, you have to train your eye. It's when you backtest, you have confidence in everything. So you have seen the entry model we are using, but make sure you identify your structure and your bias before looking for power of trade. I hope I'm making sense. The same thing if you are in downtrend, because price have failed to continue moving down. We have closure here, and we're anticipating that next day price got to be bullish because we are inside the internal range liquidity. Because of this week here, in 15 minutes time frame, this is a daily candle. We're moving down to 15 minutes time frame. It's likely we see a zone where price will manipulate before start moving up. So now let's assume in 15 minutes time frame we spot lower highs or lower low. That's a meaningful zone, or maybe trend line, any sort of liquidity available there. Then price opens here. This is the closure of the day, and the next day opens on the Asian section. We have a range. As this range continue moving, this is the closure of Asian section, and here is the range of Asian section. As London volume comes in, we're anticipating that price is likely to manipulate, pull inside these very old price actions, and we look for market structure shift, and we target this very high. So this is what we'll be looking for every day when we open our chart, when we are in uptrend, because price moves from external range liquidity to internal range liquidity. On the internal range liquidity, we look for our bias using daily time frame. So once we can be able to find two candles of this nature, we are now anticipating that next day price is likely to continue moving up. Same thing if you are in external range liquidity, we spot this type of candle formation in daily time frame showing exertion. Next day, we are looking for Asian range, London manipulation, market structure shift. That may happen during New York time, and the price is likely to move down, and we target any meaningful zone for us. But it doesn't end here. Also, okay, now what if we spot price in the middle of the zone, moving down to reach this external range liquidity? That's when we have two solid candles, two solid bullish or bearish candle. How do we tackle it? This is when we use continuation pattern. I hope I'm making sense now. So let's move into that. Bear with me. Everything will make sense in no distant time. Okay, guys, let's talk about expansion. So now let's assume price opens. As we open our chart, we saw this candle. This is the first candle, and this is the second day candle. So the third day now, we are now anticipating that price got to continue moving down with this very same volatility he's possessing in the previous 2 days now, because we are trying to target this internal range liquidity. So how do we get involved here? This is when we use continuation pattern. How do this continuation pattern works? Because it's the same power of trade that we are using. We want to see price in this nature. Price is likely to give you this type of formation. Price opens here, close here. The continuation will be in this nature. We have to see break of structure. This is when you see the day you see Asian section move very fast. We have now a break of structure. We have a break of structure from this closure of previous day. It's likely price will show us other block of fair value gap, which we use as a continuation. The manipulation happens during the London section. During New York section, it's likely price will target this other block of fair value gap. So our entry will be somewhere around here, and we target this very zone. So this is what we use during the continuation pattern. I hope this is clear. So it must not be same pattern every time. You must be dynamic as a trader. So we use two types of bias here. When we have exhaustion and when we have continuation. I want you to screenshot everything so that when we move into live example, you will be familiar with everything that I'm doing. I will give you example in DJ, BTC, and gold. That's how most pairs I trade every time. So let's move into live example. See you there. So this is the first example, and this is on XAUUSD. Current example, what happens last Friday. pay very good attention, which is on 21st February 2025. The first thing we do according to our illustration is to identify the structure of the market. We have the structure of the market and price was obviously in uptrend. And the next thing is to bias. Where are we now? Price was in external range liquidity. This is our external range liquidity. And this is our internal range liquidity. So because we're in external range liquidity, that's where we met price. We are now looking for our buyers to tell us what to do, if we are likely to drop back into this external range liquidity, or are we to continue up. But luckily for us, price was still bullish because this is the first day candle, second day candle is still close bullish. So had it been this candle close bearish somewhere around here, you see that we are likely to continue going down to this very external range liquidity zone, but price close bullish, right? So we are going for buys. How do we get involved? We are using continuation pattern for this, not the main power of 3. We're just using continuation pattern. So we now move to our 15 minutes time frame. After we have done everything, both the market structure and our bias in daily time frame, we now move down to 15 minutes time frame to look for our entry model. So you can use this indicator, this Argon session indicator, to know your Asian sections and what to do. Asian section, we set up everything you will do for the day. So that's the day. This is Friday, and we have what? We have this low here, which is the New York low for the next day. We have to mark it out as our set of liquidity. This is our previous day highest point, and this is a liquidity zone. And luckily for us, you can see as price push through into that zone, market sweep the liquidity and show us a market structure shift. You can see we have a very good market structure shift here and present very nice order block here. This very nice order block, got a demand zone, and as God may have it, we go for long position, set our pending order here. You can see that if we go for 1:2, this is our 1:2. Then if you target this very high here, we produce 4.26 R on that Friday. So it's not a very good price action, but if you understand what you're doing, you can still make money in any condition of the market. So we're now moving to next example. I will show you on Bitcoin and GJ. These are the 3 pairs I trade every single day. Now let's go to another example. So guys, this is second example, and we are using pound yen. This is current example, and we'll show you what happens last Friday, which is on 21st February 2025. What happens here? Price was what? Price was in downtrend. After taking out this very external range liquidity, price moved back into this internal range liquidity, which is our order block, obviously a supply zone. And on that day, look at it. Price, this is the first candle, second candle, it closed bearish. So we anticipate that the third day price will be bearish, and it's bearish as well. The other day, the first candle bearish, second candle bearish. We anticipate the next day will be bearish as well, and it's bearish as well. So the same thing all to this extent until we reach to this expansion phase. This happens on Friday. The first candle is bearish, second candle is bearish, and the third day we're anticipating that price got to be bearish as well for we to target this external range liquidity. So we are moving from internal to external now, but we are in expansion phase. So all we have to do now is just to move to 15 minutes time frame as the day closes. And on Friday, all we are looking for is bearish setup. And on that bearish setup, we are looking for continuation pattern, not the power of 3 as well. So now let me on this indicator to show us where we are. You can see that this is the previous daily high. You can see that this is Asian high, and this is a liquidity zone, and this is London high, and this is a liquidity zone as well. Price have made through it. All now we are looking for is market structure shift, right? We have a failed high here. We have a failed high here. Price failed to continue here, which shows indication of reversal, and we are looking for market structure shift because it's a continuation pattern. We want to see a break of structure with market change structure here, right? So this is where you have to apply your experience. For me, this closure here doesn't make sense to me. As price break through this very low, another candle close bearish immediately inside this range. It can be a fake out for those people who are trading breakout. So I have to wait. I won't call this a market structure shift. I have to wait for proper closure candle. This is the zone. We have a proper closure. Price close here. You can see that price close here. All we have to do now, instead of us to call here inducement or all these things you guys use to indicate your entry pattern, I will set my pending order here because we are in high volatile zone. We are now on New York section. So here it becomes my entry. You can see that we're going short, and you can see immediately price move inside this other block, price expand up to, if we target the previous daily New York low, we make 7 hours. Most people capture this move, including me, but I only close this. I made around 3 hours because I extended my stop loss this zone, right? So let me give you last example on BTC, then I'll end the video. So you have no reason not to subscribe now. You have no reason now not to share with your friend, because I know I've touched lives so much the way I approach things with you guys. So let's move into the last example, then I'll end the video. It's now super long, but I don't care. Value matters. If it's one person that watched the video to this extent and he gains the value, kudos to him. So here is the last example for those who have watched to this extent. Remember, I illustrated about uptrend, and there must be the case in downtrend, but we don't talk about the ranging market. It's one of the conditions you can spot price, or you can spot the market whenever you open your chart. Price will never be in uptrend always. It can never be in downtrend often time, but you can see it in those three conditions: uptrend, downtrend, and range. And now on BTC, we have ranging market here. This is our resistance and this is our support. So how do we tackle this? It's a big problem. Pay attention here. Price have moved down from this zone, take up this liquidity, move up again. All we are looking for is indication to take it down again, because we're in downtrend. The overall trend is downtrend, right? Why do I say it's downtrend? There's no obvious break of structure here, but if you look closely here, you can see that price failed to break up this high. So this is a failed high, and it is in downtrend. That's how I do mine. It is in downtrend. It's clearly in downtrend. So whatever I'm looking for here is the opportunity to sell now. And luckily for us, on Friday, on Thursday, price push up to this very high, right? This is when we use our pure power of 3 entry model, right? So you can see a lot of rejection here. We have a rejection here, we have a rejection here, we have a rejection here. All we have to do now is to move down to our 15 minutes time frame, because we have identified the structure and our bias. Yeah, we don't have a clear bias here. What we are using as our bias here is this resistance zone. But what will take us in is because we are in this internal range liquidity, and we are looking for entry model using power of 3. So if you show us power of 3, we are good to go, right? Now on the 15 minutes time frame, on our Argon session indicator, you can see that Asian section ranges. Pay very good attention here. We have a range in Asian section. Price manipulates during London, but on this manipulation here during London phase, I will say that the volume is not enough to continue pushing the price, because if there is volume, we must see a fair value gap. The only fair value gap we have here is this. Look at it. There's no fair value gap here. The only fair value gap we spot in 15 minutes time frame is this very one here, and immediately the fair value gap formed for the continuation is get inverted. The inversion of this fair value gap will take most of people who understand the structure. But because we are using power of 3, we are using the same criteria. We're looking for market structure shift. Obviously, you can see that we have no market structure shift. All we have here is another failed high. This is relatively poor high, and price break off a structure here. The low it created, it breaks it up with this big momentum candle. What will take us in? We are using this breaker block as our entry. Here is our entry. I'm using this breaker block. Stop loss above this candle. So we're going short during this time. You can see that our stop loss below this week, above this week, sorry. and we target the previous London and New York low, anyone that we like. And if we target here during this time, we made around 2.5 risk to reward. But if you understand the support and resistance you mark, you can target this low as your last TP. And if you target that, you earn around 4.3 risk to reward. So we have to end everything here. I hope this video helped. I want you to like this video, comment below, share with your friend who are still struggling. I take my time to record this video, so you have to take your time to watch it, time without number, to understand everything. And you put it in practice, backtest, and come back and thank me later. Good luck and see you in my next video. Bye for now.